Welcome back to another video. Hopefully you guys are doing well. Today I wanted to do a trade recap and also just kind of a day recap. I'm actually break even on the day. I'm up around $100, so pretty much break even. But I want to run through you today and what I learned and what hopefully you guys can learn as well. What my eye was, what did I do right, what did I do wrong? Because I ended up getting stopped on a trade pretty much right before it ran a lot. I should have been up at least $1,000 on the day, probably more. But I want to dive into what happened today, where the market was at, how my kind of bias in my mind we're looking at today, and what am I using from today going into the rest of my trading. So first thing I want to do is I just want to start off by talking about my bias going into the day. So what I'm going to do is I'm going to go back to New York AM, and we're going to actually pretty much just replay the entire day from New York AM because I want to go over how price actually structured from here going into the open, what was my bias. So first thing, zooming out on the bigger time frame, when I do look at the 4-hour, I can notice NQ is currently inside of a 4-hour fair value gap, but we do have an SMT on the bigger time frame. But order flow has been bullish this week. So when I'm looking at the weekly profile, the weekly profile is bullish, right? Monday opened and we pretty much put in low of week, and we've just been expanding ever since. So going in today, I could possibly be expecting a rebalance and then a move higher. But at the same time, we also kind of have this SMT at the highs. This fair value gap maybe could get ran through. But the biggest thing I'm watching here is the reaction on the smaller time frame, right? I'm not trying to predict because I can look at this and I can say, I don't know if this is going to hold. I don't know if this is going to get ran through because of this SMT. I'm not sure. So going into the morning, I can zoom in and I get a lot better understanding of what price wants to do from the internal price action, right? So the first thing is I zoom in and I do my analysis again, right? I can say we're in a 1-hour fair value gap. We have a 1-hour bearish fair value gap right here that's about to get opened up when market opens, or that's at 10 o'clock. Zoom into the 15-minute. And I notice we just recently took sell-side liquidity. So we've taken sell-side liquidity. And one thing I noticed right before market open, and not really right before, but one thing I want you guys to notice with today is we had 830 CPI. 830 CPI or data highs are a very high probability draw on liquidity. Whenever you look at CPI or an 830 news before market open, the data high or data low is a very likely draw on liquidity. And we actually ended up taking both the data high and the data low because we put in a data low from this move lower and then we manipulated before we going higher. So going into open, I'm looking at this like, okay, bigger time frame. Right now, not sure this fair value gap is going to get ran through. I don't really think it will, but it could. I'm aware of it. Sell side just got taken, so I'm more bullish, right? What do I need to see for me to really be bullish, though? I need to see a change in the state of delivery. I need to see displacement back up. There needs to be a reason for me to take some sort of long. So the first trade I took today was actually a short on ES. So pulling over ES here, going into the open, this bullish imbalance was, again, still holding. And what I needed to see for me to be bullish was this 15-minute fair value gap get ran through, right? When I look at the 15-minute and I look at ES sell side taken, we're holding this bullish imbalance, but we're still rejecting bearish order flow, right? We're still holding this fair value gap. And once we reject here, I can expect to possibly go lower. Now, why can I expect to possibly go lower and not much lower? Well, there hasn't been a manipulation leg before the move higher, right? And if we are expecting 830 data highs to be the drawn liquidity, I'd want to see some sort of manipulation leg first, right? Meaning some sort of move lower, take the internal low, and then look to see a move higher, right? So going into the morning, ES ended up running back into this 15-minute fair value gap. We ended up taking this recent high. ES sold back off. We got a change in the state. A series of down closed candles ended up getting closed below. And I liked this for a move lower. And the reason I like this for a move lower is because I can catch both, right? I have no idea if this 4-hour fair value gap is going to get ran through, but it could. Why could it? Because this 30-minute fair value gap just held bearish, right? Market opened, we rebounced to the 4-hour or this 30-minute fair value gap, and we have a big SMT, right? Look at the bigger time frame. There's a massive SMT here, right? So I don't know, but what I do know is based off of this model, we will see this recent low. And that's how I position myself. There is a possibility for market to go a lot lower. Am I targeting a lot lower? No, I don't have confidence in that. What am targeting? I do know that this model shows me I'm confident that we go to new lows. 15-minute fair value gap held bearish. Recent high got taken. We had a change in the state. Candle closed below. a 1 minute fair value gap opened up bearish. So what I can do here is I can put myself in a position with this trade to, number one, catch what I'm confident with, but most importantly, number two, even if I'm wrong, it doesn't matter if I'm right or wrong, I have no clue if the market wants to sell off. If we do want to sell off fully and break through that 4-hour fair value gap because of the bigger time frame SMT, I'm going to be in a position and in my runners to take advantage of it, right? But I'm not in this trade trying to predict that. I'm in this trade targeting low of day, but I'm also knowing I'm in a good position because we can see a lot lower. So ES comes back, we tap into the fair value gap, I get entered, and we end up selling back off. So I move my stop to break even. I take 70% of my position off, right? Low hanging fruit. Your trading will see an increase when you start taking low hanging fruit. What are you confident with? Like I just said, I'm not just targeting a massive move. I'm letting my runners go. So I take 70% off here, and I'm looking to see a continuation. Market comes back up. I get stop to break even. Fantastic trade, great plan, great risk, all the above, solid trade. Stop to break even. Now we're reevaluating. So that trade was great. Now I look at this market and boom, that trade's out of my head, right? Trade's out of my head. Good trade. Boom. What is the market now showing me? Sell side is now taken. This is the manipulation leg I'm looking for. 1 minute fair value gap gets ran through to the upside. This is a trade in its own if you're looking at the smaller time frame, right? If you're looking at the smaller time frame and you zoom into the 15 second, and as soon as we close above this, you can easily target the internal highs and let your runner, again, go to the external highs. And this would have been a winning trade. And using this as an inverse. What's the bias here? What's the trade here? This is something I did not take, but this is an absolute great opportunity. Sell side swept. Fair value gap gets ran through. Take this as an inverse, right? Once this gets ran through, we're at least going to this high. It's confident. Let your runners go to the external high. This would have played out beautifully. So now, this is where data highs come into play because we've now seen our manipulation, right? What's the manipulation? The leg, this last leg to go take this recent low. We sweep, and then now we're starting to have a change in the state of delivery, right? We take the series of down close candles, but ES comes up, and we actually reject it the first time. So now we pull back to NQ. Pull back to NQ. And where was NQ at this time? NQ at this time did the exact same thing. We zoom into the 1 minute. Opportunity here on the 1 minute. Again, this is where we get into my fail, or one of the wrongs today. Hesitation. This was a very, very clean long, in my opinion. Decided not to take it. There was an SMT against it, but I still was very confident with it. The only thing that made me not take this trade was how fast we rebalance. I was looking to take a long in this fair value gap, stop at the low, and look to see a continuation. But I was too zoomed in, and I was taken advantage of just how fast the rebalance was. This fat 15-second candle came in, and keep in mind, we did have an SMT here. So I wanted to see just a little bit more confirmation because at the same time, again, look at this. ES at this time had not taken or had not broken through change in the state, right? This is what the market looked like at that time. 5 minute opened. I'm expecting to close above. We literally wicked all the way back. So when I saw that internal SMT, I was a little bit sketched. And so I decided to step away, or not step away, but I decided not to enter it. But it did end up working out. 1 minute fair value gap held bullish, continued to hold bullish, and we ended up seeing an expansion. Now, I've had everything I've needed to see happen for what? A move towards data highs. Why? Because this now becomes the external model, right? I'm expecting buy side of the curve of the market maker model. Why? Sell side swept, bigger time frame rejection of the imbalance. There has been a manipulation leg, right? Internal sell side has now been swept. We have now had a change in the state of delivery. These series of down closed candles. If we take this last down closed candle of the manipulation leg, we end up closing above it. And this is where I'm looking to take a possible long entry. So I'm looking to take a long entry now because I'm expecting the draw on liquidity to be 830 data highs, right? This buy side level. Where am I looking? Now, in my mind here, right? The way that I'm looking to take an entry is I need some sort of SMT. If I am taking a trade in around equilibrium of the range, right? Meaning if I take my fib and I just put it from the high to the low of the range, if I'm taking a long around equilibrium or in premium of this range, I need to understand and need to know that there's some sort of internal manipulation or SMT because there's got to be a reason for me to think that there's a protected low. And the reason I need to think that there's a protected low is so I can have good risk if I'm entering so far inside the range, right? Because we could still come back down, I get stopped, and then it goes back in my favor or whatever it is. So I'm waiting, and this is actually when I ended up taking this long on ES and on NQ. And they both ended up getting stopped at break even. Let me zoom in here and we can show this SMT. At this time, ES ended up coming back. We took this low. Boom. NQ rebalanced back into and tapped back into this 1 minute fair value gap. We had an SMT. We were back at change in the state of delivery, and I took a long. And I put my stop at this internal low. Now, this was the problem today. This right here is beautiful. I should not touch it. I should enter because this is a great, great trade. Why is this a great trade? Let's go back through the textbook, right? High quality buy side. What's the target? 830 data lows. Okay, boom. Bigger time frame rejection of an inefficiency. Sell side swept. Manipulation leg. Change in the state of delivery. This is clear. We want to go to buy side. The problem was today is just too much. And that's a lot of the times what easy problems happen is we overanalyze and we make decisions that don't need to be made. And what happened was I entered this long. There's actually two main mistakes. Number one, I didn't scale at the internal high because I wanted to see buy side. And I was confident we see 830 lows and I wanted to milk it. This should have been a scale. This was a little bit of greed. Market ends up holding, pumping, provides a solid 40 points. I was up around, I want to say 600 at this point on the small account. And we end up, after this internal high gets taken, I move my stop to break even. This is where I did something wrong. If I'm moving my stop to break even here, I should be scaled out of a position because this does not invalidate the model, right? What invalidates the model? Well, if we look at where we are in relationship to the buy model, we can come all the way back down here, rebalance the equilibrium of this entire price range, and then go lower, or then go higher. So I entered in long at the SMT, at the change in the state, great entry, great stop. Again, my stop is at the protected low, right? At the protected low, and actually in this low here to the left of us, and I'm seeing data highs. Internal high gets taken. I realized I missed my take profit, and I was scared. Not scared, but I realized like I couldn't. If I didn't take profits there, I have to move my stop because we could come back down, and I'm putting on too much risk. So I moved my stop to break even. Market comes back down, stops me out at break even. Does not hit my stop loss, my original stop loss. And then we end up seeing a continuation the rest of the day, pretty much straight towards buy side. So what can we learn from this, right? Well, the first thing is when this happens, your goal is not like to beat your head up at it, right? Notice like how I'm able to view this and not be extremely upset about it because I'm able to easily know and recognize what the problem is. How can I fix this? And treat it as an opportunity. There's a reason why you fail. There's a reason why you make mistakes. And it's so you can learn in the journey. The universe is giving you this to learn, right? And it's all about how you approach it. So that's the first thing I want you to get just right now out of this conversation and you watching this is stop treating your losses and stuff like this like life is trying to just fuck with you. Like don't stop taking this personally. Like I see so many traders, they get really, really riled up when stuff like this happens. Well, they'll get stopped out of break even, it'll go in their favor, and they think about how much money I could have won, all of this stuff that I could have been happening. Oh my God, I would have passed my account, I would have done this, blah, 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 right? Whatever it is, get that out of your get it out of your mind, right? It doesn't matter. What matters is what are you going to do with this information, right? Are you going to waste all of this emotional energy that you just spent crying over you getting stopped out of break even? Or are you going to actually use this as an opportunity to learn, right? So what was the problem here? Entry was great. if I entered this trade with my right stop and I set my PT and I stepped away, I would have worked. But there's also times when I move my stop to break even and it's a good thing, right? Because I'm managing risk. So what can I learn from this trade versus another trade that I know when should I be moving my stop to break even? When should I not be moving my stop to break even? And what are like the differentiating factors of it? Well, number one, the biggest thing when it comes to moving your stop is what's the actual trade that's being taken place, right? Where in the actual market, if your stop is in an area in which the market should not go in relationship to the model, then you're fine. But a lot of the times that's not the case because you're not putting yourself in a position to do so. And that was what my problem was today. Is my stop loss originally was in a place in which could possibly invalidate the model, but more importantly, there's a lot less likelihood of it invalidating if we were to not go there. And what I mean by that is since this SMT gets put in place, number one, when we come back down, there's another SMT here. This SMT still holds. It was there the entire time today. But this SMT never broke, right? So the whole reason for me entering this trade in the first place was because there's an SMT here, which creates what? This a protected low. Like I said earlier, if I'm entering at around equilibrium of the price range, I should be trading or I should be taking a trade in risking, in taking it because there's a protected low. Because I don't want to see us, play around at equilibrium. I need to see a better risk. So if there's an SMT and I want to see a protected low, I put my stop there, right? And in this case, I put it even lower at this internal low in the imbalance, right? When market comes up and takes its internal high, at this point in time, number one, I think there should be partials. 25%, 50%, something. There should be some sort of partial. Because what happens is if I take partials here and I decide to not move my stop, I actually am moving it at break even. And that is how you should think about it. Because what's happening here? What you should think of this is instead of being scared of like keeping your money, again, there's multiple ways to think about it. And that's why I love diving into these conversations because my brain gets to think even more about this, right? And how traders react and think. But there's multiple ways to think of this. Number one, this internal high gets taken and I don't take partials and I move my stop to break even and I get stopped at break even. Number two, I do take partials and I don't move my stop, but it still most likely becomes a break even trade because of the risk, right? Or at least not a bigger loss. So like, for example, if I was to do this, and let's actually go back. Let's go out of replay. And I enter this trade. What's the risk here? 4 contracts, $200 loss, right? So $200 loss if that's my risk, right? And if I take profit at this internal high, it's $296. So let's I take half off, right? I take half off, so that's around $150. So if market comes up, and my initial risk on this is $50 or $200. I enter short or I enter long, market pumps, boom, high gets taken. I take 150 off and we come all the way back down and let's say I did get stopped. I lose $50. Okay? Think about this. Really think about this because this is going to change how a lot of you, how you manage your trades. Would you rather have a less likelihood to get stopped at break even and a less likelihood to get stopped out of the move before your move, but you are sacrificing potential profit? But what you can do is use this method, which means you will still be securing profit, but your perceived idea of keeping that profit because you want to move your stop to break even. So it's like, instead, you're like, oh, I made my $150. I'm so scared to lose my $150, right? And you move your stop to break even, right? Because you're so attached to, like, right when you get that PT, you're like, that's mine. I'm securing that shit. Or you can manage it. Take your profit. Don't move your stop. And the loss on the trade gets cut a lot, right? You just cut your trade, your potential loss on this trade by a lot, and you're still in it, right? And that's all management. That's all. What is your conviction? What is invalidating the model, right? That's number one. What is invalidating the model? Do I take partials? Do I move my stop to break even? It all is what I want you to get out of this video is it all depends. The best trader that you can possibly be is somebody who is fluid. You have no idea. It's not a one-size-fits-all thing. If you're in trading and still think it's a one-size-fits-all thing, I'm sorry to break the bubble, brother. That's not the case. You need to be able to make decisions and require different trade management on different situations. And that only comes through experience. And this is one of those examples where there's a lot of things that I could have done differently. And it all depends on who you are as a trader, right? How do you see the market? In my opinion, the best thing that I can do in this case is just let it be. There's two things. Either just let it be or take partials and let my stop be. That is it. But there's a lot of different things you could do here. What matters is the idea is right. That is the most important thing that matters here. The idea is right. We are right on this move, right? We are right on our analysis. We're right on this move, and it ended up playing out beautifully. But what's hard is this doesn't matter if we can't position ourselves correct, right? It doesn't matter if we're right if we can't position ourselves. So this is a kind of video for me and you to just start thinking, right? And that's what my videos are for. Is most people don't want you to think they want to give you like a little information and tickle your little dopamine hitters and receptors. But like my goal is to genuinely make you think, how do you manage your trades? Are you a break-even type of person when your price target gets hit? How have you been getting stopped out early before the move, right? Take time, because it's like you're not going to improve if you're not taking time to think about it. So today was a perfect example. I'm up $100. I should be up a lot more, but I don't care because it was a great opportunity for me to learn, great opportunity for me to share this with you guys. And I get to learn a lot out of it, and I bet you guys do as well. So overall, solid day, solid entry, bad risk. And that's okay. And that's what we learned, right? Bad stop, move stop to break even, ended up getting stopped. What can I do differently? Keep the stop there, step away. Don't overanalyze. Don't overthink it. Trust your analysis, trust the risk, and accept the risk. Importantly, accept the risk, because if you don't accept the risk fully, you're going to always want to be moving the stop, because you're going to not want to lose as much as what you've put on, and you make the decision before you enter the trade. Alrighty. Hopefully you guys enjoyed this video. If you did, leave a like, subscribe. If you want to see me trade live, I trade live every single morning in our mentorship group. We love coming on together. I get to answer my students' questions while I trade. I get to trade live, and it's fantastic. So hopefully you guys enjoyed. I'll leave a link in the description for that if you want to check it out and learn more about the mentorship. But I'll see you all in the next one. Peace out. Good luck this week.